Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, honestly speaking, yesterday I slept around 11:30 and when I woke up, I was shocked. I was not expecting this kind of massive candles. Gold made a high of 2039-2040, and right now we can see that gold is standing at 2031. Gold was in downtrend for the last couple of days and now things have changed completely. So we can clearly see that market is going for a trend reversal right now, and the trend of the market has also changed. You can see gold rises as Fed rate cut prospects dent dollar bond yields. Gold higher on Fed's pivot towards lowering rates. Dollar takes a dive after Fed signals rate cuts next year. Dollar was under pressure on Thursday after the Federal Reserve's latest economic projections indicated that the interest rates hike cycle has come to an end and lower borrowing costs are coming in 2024 next year. So market was expecting that there would be no change, okay, but the prospect of rate cut next year, okay, took a pressure on the chart of dollar, as a result of which we got to see some massive moves. And for the last couple of days, we saw that US dollar was trying to recover. DXY was showing signs of recovery, and right now we can see that DXY is continuing the downside. So right now the fundamentals, okay, the fundamentals are pushing dollar towards the upside. So as a result, you need to plan your trades accordingly, because right now this is the direction of the market and dollar is towards the downside. Dollar is heading towards the last support of 102.50. Why last support? Let me show you. This is the daily chart of US dollar index DXY, and you can see that this is the last support here. Once dollar will be below 102.50, then we do not have any immediate support and maybe dollar will be heading towards 100. So my dear friends, plan your trades accordingly. And if you look at the chart of gold here, then obviously gold is bullish right now. So as a result, try to be on the buy side only, because in this market condition, if you take a sell side, there's a high chance that you will be trapped. After all, fundamentals decide the direction of the market and technicals are useful for entry and exit purpose. And right now, the fundamentals have given the signal that gold, you need to go up. So as a result, try to be on the buy side for safety purpose. So if you already have taken a buy position, then obviously you need to be on the buy side, because further upside obviously very much possible. In the month of December, though we don't get to see much volatility, much movement, but still, okay, it's better to be on the bullish side. And on the other hand, if you miss the opportunity just like me, if you're sleeping just like me, then obviously buy at retracement or buy at breakout is the only trading opportunity that we have. And if you're from India, Pakistan, Bangladesh, or Asian region, I believe that most of you have missed opportunity because of the odd timing of FOMC. I never liked the timing of FOMC, and that's why I always prefer to avoid FOMC. But this kind of move sometimes make us really sad. So my dear friends, you can see here I have used Fibonacci here. So the first level that is coming in front of us is 2024 to 2022. Let me change the color. Okay, 2024 2022 is the FIBO 23.6% retracement level. During the day, if market takes support and bounces, we can go for a buy position. The second support is coming to be around 2018 level, but to be honest, I'm not sure about the level right here, because the level of 2018 we have derived from the 200 moving average here. So this is the 200 moving average. So during the day, if you see that market is standing at 2024 with a big red candle, obviously you need to use your common sense. Don't go for a buy. It means that market will be going for further retracement. In that case, observe the market on 2018. If you see the market is trying to take support on 2018, if you see market is showing price rejection from below, yes, you can hit the buy button. And then we have Fibo 38.2% retracement around 2014. So here you can see we are only using Fibo and we have the 200 moving average, which we are expecting that the previous resistance will be working as support here. So these are the three retracement levels where we can look for a buy position. If market takes support and bounces, you can definitely hit the buy button. If I take you to the 15 minutes time frame, you can see that on the 15 minutes chart also we do not have any other levels. And if I take you to higher time frame, then obviously you will not find any proper answer. So Fibo seems to be the best and reliable option to find out the retracement levels to go for a buy position. So let's wait and watch. Sometimes in this type of bullish market doesn't come for retracement. In that case, buy at breakout is the only trading opportunity or solution for us. So in that case, what you can do is you can look for a buy above 2042. Why 2042? Let me show you. Because you can see here 2040, 2041, okay, this level has acted as resistance previously. So once market will break the level of 2042, we do not have any immediate resistance. At least we can expect that market will move towards 2050. So if market breaks 2042 during that day, we can consider it as a breakout and we can look for a buy position. But probably you guys have already heard me saying plenty of times that buy at retracement is always a safer thing to do. Okay, so as a result, you need to be a little bit careful while buying at breakout and do follow proper risk management. Do not trade without stop loss. Do not gamble with your hard-earned money and capital. Always keep in mind there is no 100% guarantee in the market. Never forget that. And that's a bitter reality. If you want to survive in the market, you'll have to accept the plus sides and also the minus sides. And if you look at the economic calendar, you can see that today we have retail sales coming up. So there will be retail sales and unemployment claims. So there will be some volatility. Okay, there will be some volatility during the US session. But I don't think so that market will be going for trend reversal because retail sales usually do not change the direction of the market or something like that. There should be volatility for a couple of minutes to 1 to 2 hours, and after that market will resume the overall trend again. So let's wait and watch and be careful. Okay, and one thing I forgot to mention here, that in case during the day dollar index DXY shows some recovery, the previous level of 103.30, this level will be working as the resistance. So in case during the day if it goes up, do not think that oh my god DXY is going for recovery. No, DXY is under pressure, so 103.30 will be the resistance. Okay, but in this market condition, high chances that DXY will break 102.50 and head lower. Let's see how does it react near the last support of 102.50. Things are not very positive for DXY right now. So that's all from my side, my dear friends. Bye bye, take care. Thank you so much for watching